Hello investors and future investors, welcome to the channel. In today's video, I will show you one option strategy that can be used if you're trading with a small account. So if you're new to the channel, thanks for stopping by. On this channel, we help you with option strategies that can give you consistent revenue and everything related to finance and investments. And yes, you too can make money from your living room with options trading, and I'll show you how. And all I ask in return for this free content is an early thumbs up by you hitting the like button. And while you're down there, consider subscribing for more ways to win with options. Welcome to Investment Gains. Let's jump right into it. Now, as you guys can see, my account is down drastically. However, this is not due to the current market conditions. I did have to make a small withdrawal of $3,000 in order for me to facilitate my move. I have just recently moved from the great city of New York to the even more beautiful city of Miami, Florida. And I do need some petty cash in order to start off my second business venture. So to continue with today's video, this option strategy can be used if you have a small account with only a few $100s in your portfolio, and if you don't mind trading a few times a week. Now, I will demonstrate the trade, and then I'm going to explain how to use this trade and when and which are the best stocks to use in order to maximize the profitability. So for today's video, we're going to start off with ticker symbol SPY, which is going to be the SPDR ETF. So as usual, we're going to go into trade SPY options, and now we're going to make sure we put it on sell and put. Now, in order to maximize this strategy, we're going to need to choose our strike price below the current share price. But before we do that, let's choose our strike date. Now, our strike date for this video is going to be September 17th. Now, we're going to go below the current share price, and now we're going to be looking for a strike price with a 75% chance of profitability or higher. So we're going to go with the 441. Now for the 441, you can see a 75% chance right here, and this is it up here, chance of profitability. Now we are selling a put, and because we're selling a put, we're going to receive some money. Let's go ahead and click here. Now we will receive 1.97 or $197. Now you can see some fluctuations in the prices, and that's because as of making this video, the stock market is still currently open. Now that ends the first part of this strategy. Now for the second part of this strategy, we're going to go ahead over to buy and put, and now we're going to choose our buy put right below our sell put of 41. So that's going to give us the 440. Now we're going to click into that. Now we're buying a put on this leg, so now we have to pay money. The amount we're going to be paying is going to be 1.72. Now the difference between our sell put and our buy put is going to be our total credit. So our total credit we're going to receive is going to be 0.20 or $21. So let's go ahead. We're going to hit continue. We're going to choose the amount of contract, which is 1, and then now we're going to hit review. Now as you can see up here, it says put credit spread. If you were to do this trade and it says any other thing, you've done it wrong, and I suggest you do it again or just rewatch this video. So right away, once you do this strategy, you will be receiving $20 minimum credit into your buying power. Now, the good part about this trade is that that $20 is yours to keep no matter how this trade goes. And that's the kind of strategies that we use on this channel, strategies that gives us money right away. Now, the second part of this put credit spread is that in order for you to do a put credit spread, you're going to need to leave a collateral. Now, that collateral is going to be $100 in this occasion, as you can see here. So once you do the put credit spread, you receive a minimum credit of $20 and you have to leave a collateral. Now if you go further down to the order summary, all the order summary tells you is what you did in order to get into this trade. So you sold to open at the 441 put, and you buy to open at the 440 put. Now you guys know how we do it on this channel. We like to keep it as simple as we possibly can so that even beginners can understand. So why would you want to do a put credit spread? Well, you can do a put credit spread because the barriers to entry is extremely low. As you can see here, if you have an account with only a few $100, you could get into this trade because your collateral is only $100. So that is one of the best strategies out there for beginner traders with small accounts. The other reason you want to use a put credit spread, especially on a stock like SPY, is that SPY, unlike other ETFs, has several trading days per week. In essence, you could do this trade 3 times per week for a benefit of $20. Now, it is not all sunshine and roses, as you guys always know. This is not a guaranteed way of making money every single trade. Now, earlier when I did this, I did show you the chance of profitability. So now we're going to go into that and I'm going to show you why. So let's go back over to sell and put, and you're going to see the chance of profitability. So here you go. The chance of profitability is 75%, meaning that when you do this strategy, you have a 75% chance of winning this strategy, which is extremely good. Let's just do a simple calculation. Now, if you were to get $20 75% of the time, at the end of the week, if you do it the 3 times per week, you wouldn't be making $60. Now, your collateral is going to continue being the $100 that's released back to you. So each time you're using $100 to make $20, you do that 3 times, you're going to make $60. Now, on the 4th or 5th time, you will lose the trade. Like I said, there's a 75% chance of profitability. So you will lose the trade every time you do it 5 times. But however, you will be able to make substantial amount of money before that. Now, this strategy is for beginning traders because of the easy barrier to enter. However, it is not for beginners because you need to learn how to trade before entering into the strategy. This is a 2-leg option strategy. Now, on this channel, I have other strategies that are way easier than this one as a beginner trader. So I suggest you check out those videos. I will leave the links on top. Now, how do you win this trade? Well, if on September 17th, the Spider ETF is trading at 441 or above, then we get to keep our minimum credit of 21. Like I said before, this money is yours to keep no matter how this trade goes. Now, in addition to keeping your minimum credit, you're going to get your collateral released back to you. That collateral can now be used again to perform the trade a second time. Now, the other way this trade could go again, if on September 17th, SPY is trading at below 440, then once again, you keep your minimum credit, but now you lose your collateral. Now, there is one third way in which this strategy could go. Now, if again on September 17th, Spider ETF is trading anywhere between 440 and 4041, you get to keep your minimum credit as usual. That is yours to keep no matter what. But now you're going to receive part of your collateral back. How I use this strategy is whenever a stock is trading downwards. Once the stock has a retracement, I think that's the best time to put in a put credit spread because my chances of winning is a bit higher because the stock has already lost so much. That's why it's extremely important the kind of stocks you choose to do this strategy. Now, the best way to use this strategy is going to be on an ETF or a stock that's trading flat or sideways. Now, ETF has shown us that they usually trade flat and sideways and don't have much movements. Now, market volatility is always something that we have to look out for, so anything could happen. Just keep that in mind. Now, the best ETF that can be used for this strategy, the one that I use personally, is the Spider ETF, which is the one I use for this example. Now, let's go into a second example. I'm going to go right through so I can show you guys how simple the strategy is. Now, for this second example, we're going to be using Amazon, ticker AMZN. Now, the put credit spread literally takes less than 1 minute to perform. So we're going to go to trade Amazon options to open up the option chain. Let's make sure we go to the put and the sell, and we're going to choose our strike date of September 17th. Now we're going to go choose our strike price below the current share price. And again, we're going to look for a chance of profitability of around 75%. And that's going to give us the 34.20 price. So let's hit that. Let's go over to buy and put. And we're going to choose the strike price right below our sell put, which is going to be 34.15. We hit that. And there you see, once again, put credit spread. We're going to hit continue. We're going to choose the amount of contracts we want, which is usually 1. We're going to hit review. So in the case of Amazon, we're going to receive a minimum credit of $133 right away into our buying power. Now, the collateral for Amazon is a bit higher, and that's going to be $500. So there you have it. I put on a put credit spread in less than a minute. That's how easy this strategy is. Now, we have lots more strategies like this on this channel. So if you want to join the weekly income team, like and subscribe right now. Also, hit the notification bell to get an alert when I post a video. But most importantly, share this video with someone you think that can benefit from its content. Let's help as many as we can. Thanks for watching, and remember, keep pushing your investments.